Hello everyone, today's video will be about one of the most important topics in trading. It's about the power of three, open high low close, open low high close. This will be a masterclass, so prepare your pen, paper, notions, wherever you take notes. I will go really in depth on this because most of the people do not know how to use it, because Romeo said one time, think critically. Now, I will just show the things which I've prepared on my presentation. Then, of course, I will jump on TradingView because with examples everything gets clear. So, what is open low high close? What is open high low close? Does it work? And how to use it? Also, jump and subscribe right now, like the video. Next video will be about how to determine the next draw on liquidity, because if you know where the draw on liquidity is, you can just wait for a range to form, turtle soup as we teached, and easy. Now, what is open low high close? First of all, this is time-based model. You always use it with vertical lines. What is it? Open low high close. This is simply a bullish candle. Here's our vertical lines. We see open, price accumulate positions. When a key time kicks in, low manipulation into higher time frame key level, to breaking the high that took the range low here, into optimal trade entry, or retesting the breaker block on order block FVG, whatever we have here, with another turtle soup, into finishing the high close into opposing key level. Open, low, high, and close. This is how a bullish candle forms. Next, open high, low, close. This is how a bearish candle forms. Of course, vertical lines on every important new open, like daily open, weekly, monthly, even 4-hour. But most important opens are weekly, monthly, and daily. If you're intraday trader, you need the vertical line at daily open. If you're short term, use it on weekly, and swing and long term, go through months. Does it work? Absolutely, the answer is yes, it works. If it does not work for you, it is because you do not know how to use it. And today we are about to fix that, because if you're here, you believe in me, I believe in you, and I can tell you that trading and profitability is possible, and I will make it reality for you. Go and subscribe. How to use it? Let the fun begin right now. And click the bell button, of course. This is what I've shown you. Open, range, high, turtle soup into key level, optimal trade entry into key level inside of leg 1, forming leg 2, hitting opposing key level to close the candle. And the same thing here. Open, range, soup into key level, going up, optimal trade entry happens in leg number 1, sponsoring leg number 2 into opposing key level to low and close, high and close, sorry. So let's remove that. Let's just jump into examples, because this is the best thing that we can have. I'm jumping straight into Bitcoin because this month is going to be wild because of the open high low close and open low high close. What everyone is doing right now, once we souped this CRT, just a moment, like that, and we got higher with that speed, everyone is expecting Bitcoin to go to 1 million. Yeah, no, I'm joking, but let's take a look inside of this candle, what is going on right now, and why I want to see Bitcoin come down to this breaker block, or at least take this candle range low. Let's remove this now and jump straight into this October month. Once I look at the monthly, I go to 4-hour and daily to market profile the whole candle. Of course, for every month, once you mark the open and close, go on weekly and mark every week's open, because like that you will know what is happening. As we see just on weekly, what happened right here in this price action. This order block sponsored the move down to finish this defensive CRT in order to go and complete the 3 candle model. But how did we complete it? With the new month open, which is this candle, the price just opened low and immediately got up, taking out the all-time highs. In this case, let's take a look inside of this candle. In this case, week one opens, goes low into this thick candle, which liquidated the lows here, and we caused the shift here. But I want you to see that we just formed the low of the week very early at Monday 12 a.m. 4-hour candle, or this is 3 a.m. key time. Okay, but with that immediate push, what we did, we just open low. This is our OTE into leg number 2 into high and close. And now the moment of truth, why I want shorts and not longs. What did week 2 do, and what's the work of week number 2? Of course, week number 2 more often than not is the manipulation week for the monthly power of 3. What means this? What I expected after this push was to see if we were to go even more higher or lower. But how? Once I marked the opening of the new week, what do we see? The last lows and highs are right here. We are in clear range, right? If you say this is our Sunday range, call it like that, we are just in a range. And once we opened the new weekly candle, if we were to go up, I would wanted to see open, maybe consolidation like here happened with some candles inside of this daily range, but consolidation and swooping the low, not the high. Why? And why I am saying this slowly? Because the most important thing inside the open high low close and the open low high close is, if you see it like this, it's not detailed. But if you make it like this, what do you see? You see that if you want to go high, you must open, then take out a low, and then go high and close. In this case, what did our week 2, which acts as manipulation, did? We just opened and we run up a high, open high. It's not just open and first push open high. No, you have to wait to see what will we take out of the last range. If, let's say, this is our last range like this, and a new candle opens, you will have a perfect example for this right now. This is our last range, let's say, and here we have a kilo. If I want to see price go up, I want to see the new opening to be open, stay in that range, engineer liquidity. If I want to see price up, I want to see the new open range, take out a low into key level, into flip the low that took the high, to provide leg number 2 with PDRA inside leg number 1. This is what exactly it is. It is in front of you and you never thought about this. Now, what is happening right now? We opened and we run a high, a weekly high, week 1 high. This is our time-based range. This low, I think, is secured. But as you know, we have 50% of the range, which we just met. And we can see the next reaction. But I want to see at least this taken, because my drawdown liquidity is this equal lows and the breaker. Because of that, now let's say it again. I want you to focus, take it in your notes. I don't know what you have to do, but think. Open, run high, run a high, not just pump. Open, run a high, turtle soup into key level, then you can expect low close. This is how it must be done. This is open high low close and open high low close. Why did this month go up? And I don't care about the SMT. I just care about how this month opened. This one. What did we do? Why did we not continue lower to finish this CRT low? Why? Because the month opened and ran a low, and after this low was taken out, we confirmed with SMT that, and once we flipped the high that took the low, we could have expected to see an OT and run of the all-time high. That's why the next month did this. We open and run a low immediately and high close, making an order block. And we are inside this range. And we also took, I think this was the weekly range which we took. Now, next examples. Let's go on, let's say 4-hour time frame. Let's first go on daily. I will just mark what the week is doing right now. Sorry, you can give me some time like that. So let's profile on 1 hour. This is week number 2. So let's say this is our last range. And with the open, did we swoop a low to go higher? No. What did we do? We opened and started pushing higher. And we made open high, low, close. Next, Ethereum took out this high and we made an SMT here. This is why we had a reaction from this order block right here. Now, what did they do? We open high, we stayed in that range, last low or this, whatever you want, just a run of a low or high. And what we did, open, ranging, high, SMT, key level, low and close. Next day, why we had to expect this day to sell? Because this is our last low and high. What did market do on the open? We open, we never run a low to go high. We immediately, when we opened, range, high, but see in this leg number 1, which was a possible sell, did we tap a key level right here? No. We then created another high, tapping. I think here we had a 4-hour order block. I think I'm right. Let's check. Yeah, right here. And then we had to sell off because we are open, range, high, making OTE of the week into low. What did this day do? We open and low immediately. And now we have to frame a defense because we are expecting a bearish weekly profile because of the open, high, low and close. Now, in this case, once we opened, we formed an Asian range. This is Asian range. 8, 9, 10, 11, 12. We run the low of Asia, we go higher, and right here, the people are open, run a low, high. This is okay. You also have a turtle soup into high. But once you are bearish, you must wait a high to be run. And we see what? Range, soup, failed soup, into the real soup, low and close. Today, what is happening? What is happening today? Price stays in this range until a key time kicks in, 9 AM. Range, into high, into low and close. Let's go again. You mark the opens. You see your last range where it is. Let's say it's that, and you open here. Now, you always must have a key level. If you want to go lower, what you want to see? You want to see the market open range and the first soup to be in a high, swooping a high into key level to low and close. Let me make it a little bit more clear for you. This is our key level. We mark the open, close. Let's say this is our range, which we will use to see where the price is, like that. Now we want to go down because the weekly makes open, swooping a high, and let's say we are to Wednesday expecting a classic day. We had a range before that, we have a key level in Tuesday. What we need to see a sell-off at Wednesday? We want to see open range, means staying inside of a range until a key time kicks in to have a manipulation of a high or a low depending on the power of 3. So to go, in this case, to go down, we must see after a range a high to be run into key level to sponsor a move down. And this is how you expect the open high low close and the open low high close. Now, because I don't know how much people believe in these things, but let's see why Nasdaq also sold this week as crazy. Now let's go on daily time frame and let's profile this week, the new week. What we do, let's say this is our last weekly low and weekly high, and now let's go on 1 hour. Here is our open, and here is our last range, like we marked it on the picture. Our range is just a clear high and low. So right now, in this case, what did the week do? We immediately open and run a high, and once we flipped the low that took the high, we wanted to see a sell-off. But why didn't we see? Because S&P 500 took out also a low, making an ascent and forming a range weak seek and destroy until it's not. In this case, what we have here on this low? S&P with Nasdaq. This is why Nasdaq did not go lower. And also, if you know, S&P equals turtle soup. So if also you know that S&P equals turtle soup. The next day, let's see where we had here. We did what? We open range and we swoop a high, again making the right power of 3. also you have to notice that the 6 p.m. at Monday, if you see the left corner, the open, high, low and close, their numbers, the open and low numbers are equal. This means the weekly candle does not have a wick, and once a candle does not have a wick like this one, we have to create one. We have to engineer a sell side or buy side in the candles, because in this candle we have only sell side delivery, because the week up we had only buy side into sell side delivery into buy side delivery into sell side into buy side into sell side delivery, into now forming an SMT at a key level. And we can see push from here. Yes, I'm not saying I would buy, but I can say that we can see a buy from here. As this continues, what did you understand? We see open, run a high. We already expect a bearish week. Once we see this SMT and S&P 500 takes out this low and started going higher, you can expect next day to be open high again. This is why Nasdaq run again up, swooping another high into going down. So this week is expected to either close below this, and next week, if you want to see bullish move on Nasdaq, we want to see open, run a low to go higher. Or if we want to see a bearish week, and we don't have that here, we can see open, slowly going up into engineering a wick or buy side delivery about this, into breaking the low that took the high, into continuing lower into this equal lows. I hope you understand anything until this moment. So now I will just draw you the full picture that you want to see once you use the power of 3, the open, high, low, close, and the open, high, low, close. Again, you can screenshot that, you can go check it on your charts. It's pretty fine. I know that works like that. I know that nobody says it like that. I know you learn a lot from me, and thank you for your trust. We have a range before the new week open, before the new important open. It can be daily, weekly, monthly. If you want to go higher in this case, we want to see a key level below that range low, not hit. The week open. Immediately, if we want to go higher, we want to see a low taken out into a key level. In this case, the open, low, OT, high, close works because we make open, took a low into key level, into OT, into high and close. And also the high and close happens into a key level. The market moves from key level to key level, from liquidity pool to liquidity pool, and key levels are also liquidity pools. They are internal range liquidity. In this case, this is everything you have to know. Another example is if you want to go lower, you must see at the open of the candle staying inside for tight range, into swooping a high into key level. This is why this is open. Let me make it like that. Open range, high swoop into low swoop into close range. Like that. What means this? Means you open, expect a range, you expect high to be swooped, and then a low to be swooped into key level to close the time-based range. I hope you understand this, because this is very crucial for you. And for your screenshots, you can take this. we open range, we open the time-based range, we make sub of a low into key level, and we make sub of a high into opposing key level to close the time-based range. Okay guys, thank you for watching. I hope you stayed until the end of the video. If you have done it, type down a comment, like the video, subscribe, and be prepared because the next video will be about determining the draw on liquidity, which is one of the most important things like this one. And I can guarantee you that nobody will tell you the things that I will tell in these two videos. I hope you understood how to choose the open high low close and open low high close, and I want you to go back test it, then jump to my Telegram group, DM me, show me at least 10 examples of you testing this. I will wait because that will show me how many people have stayed until the end of the video. Thank you so much, subscribe, and let's go.